So Frank, I think month over month we talk about leasing demand, but that continues to be a story. So the leasing demand is continually increasing.
You said that right, absolutely. It was about 3.6 million square feet of demand, a very healthy number. If you multiplied that 3.6 out for the year, you would have 43 million square feet of volume.
Wow.
And remember, anything above 40 is a wow factor.
Right.
And that absolutely would surpass the 2019 total volume. Are we going to have that every single month? Remains to be seen, but not too bad for April. And that was led by Cleary Gottlieb with their nearly 500,000 square foot relocation within One Liberty Plaza.
Right.
Tenor with their 125,000 square foot sublease at 345 Hudson Street. Jump Trading with a nearly 100,000 square foot deal at 50 Hudson Yards. So you had a string of activity. And by the way, with that Tenor deal, that actually helps create a new milestone for the amount of AI leasing. So year to date, we now have surpassed 800,000 square feet of total leasing volume. So in the first 4 months of the year, we've already surpassed all of 2025's total AI demand.
Wow. Well, we'll look in the tech report when we get a chance on that. But what do we see coming up? I mean, the leasing demand obviously has been strong, but is there, we talked about it the other day, there seems to still be healthy demand, behind that.
Yes.
There's tenants in the market, the large tenants in the market. What are you seeing with the tenants in the market?
Quite a few. There's about 35 million square feet in total of tenants in the market activity of about 400 separate requirements, all the way from 5,000 square feet up to 1 million square feet. The large ones absolutely are a disproportionate share. They only make up about a quarter of the number of requirements, but 70% of that 35 million square feet.
Wow.
So yeah, absolutely. So with those limited large blocks that are out there,
right.
That is, for a much, much larger set of requirements.
And it's only about 70 million square feet of available space.
Now it's less than 70 million square feet,
Okay.
Absolutely. So it's the tightest amount of overall supply since late 2020.
Wow.
And down substantially. We are down nearly 60% from the post-pandemic peak 2 years ago when we had about 98 million square feet.
Crazy.
Yeah, and not much more room to go to get back down to the March 2020 level, which was about 53 million square feet.
Right.
So we are 60% of the way there.
And that supply number doesn't even include some of the buildings that may be removed because of conversions.
Absolutely. There's quite a few buildings that are on that sort of will they or won't they list. They're included in the availability, along with buildings that might be pending sale. They might be on the watch list. Clearly, when buildings do get confirmed for conversion, the available space gets removed, such as this month at 135 West 50th, 1 Whitehall Street. That was nearly 500,000 square feet that came out of the availability in April.
Right. And I'm seeing that some of these large tenant requirements are also changing the positioning of certain buildings. I mean, rent is a clear indicator. We're seeing rents continue to increase.
Absolutely. The asking rent went down slightly this month, but that was really...
That's a statistic,
yes,
not a trend.
I would fully agree. And that was above average price space that came out of the numbers because of successful leasing activity. But overall, the asking rents are up 4% year over year. There's some areas of the market that are already above their March 2020 level, such as Midtown South.
Wow.
Midtown is only about 1.5% below its March 2020 level, so we are getting very close, and that does not take into account the taking rent and the concessions.
Right.
With the taking rent, it was usually a 5 to 10% discount as far as ask versus take. 2 years ago, it was on the higher end, about 10%. Now it is less than 6%.
Wow. That's quite a margin.
Yes, it is coming down, and those concessions with the free rent,
Right.
it's decreased about 3 to 3.5 months on average compared to 2 years ago.
Right. So concessions typically are not factored into the ask and take numbers. So we track those separately. So are you seeing a continued reduction in tenant improvement allowances and also free rent?
So it's a great question. So, as we mentioned, certainly with the free rent, yes. With the TI allowance, on average, it's been stable. So there hasn't been as much of a reduction there, but as we've sort of anecdotally heard, if there is that shift, it's happening first on the free rent before it's really happening on the TI allowance side.
Right. Well, it's an interesting dynamic, and we will see what happens next month.